setting up facilities in Pune and rest of Maharashtra, and also overlooking the retail and industrial business P&L. During his tenure of more than 15 years with CBRE, Anuj has a total of 18 years experience in fields such as telecommunication and real estate, with an extensive experience in executing strategic space acquisition plans for leading corporates. Our next eminent panel member is Mr. Arvind Jain, Managing Director, Pride Group. Mr. Jain started his career in the hospitality sector in the Pride Group of Hotels. A first-generation entrepreneur, his ambition and vision led him to establish the Pride Group's construction vertical. Under his skilled leadership, the group has seen phenomenal growth. Pride Group has built and delivered more than 10 million square feet of constructed area in Bengaluru and Pune under his stewardship. Our next panel member, let me introduce Mr. Pankaj Kapoor, Founder and Managing Director, License for Us Real Estate Rating and Research Private Limited. Mr. Kapoor has more than 20 years of experience in the field of valuation, consulting, and risk analytics. He is an acclaimed expert in analyzing and predicting real estate market trends in India. Pankaj is best known in the industry for bringing in scientific approach and for developing reliable market database. Our next eminent panel member, I welcome Mr. Irfan A. Kazi, Chief Investment Officer, SWAMIH Investment Fund, SBI Cap Ventures Limited. Mr. Kazi is a finance professional with more than 25 years of international work experience in alternate investments. He has held senior investment responsibilities in 8 funds, including as CIO in 4 funds, a hedge fund of funds, a hospitality fund, industrial fund, and now in SWAMIH, a stressed residential assets. Mr. Shailesh Puranik, Managing Director, Puranik Builders, is our next eminent panel member. Mr. Puranik is a graduate from Sir J.J. College of Architecture, one of the most prestigious architectural institutes in India. He took over as Managing Director of Puranik Builders in 1993, and under his able guidance, Puranik Builders has grown into a company with everything from land acquisition, architecture, construction, sales, marketing to society maintenance being managed within the organization. So this is our eminent panel, and Mr. Piyush Gupta, I hand it over to you now.
Thank you, Sapna, for the introduction, and thanks Realty Plus for having me here. I think it's always a pleasure to be part of Realty Plus every year in this conclave. Good afternoon to all the panelists and all. I think it's a wonderful time. We are here talking about Pune residential real estate. And it's good to see the story specifically for housing in Pune changing for very positively after several years of disruptions, challenges, hardships. We have seen in last 12 to 18 months time, home prices on overall going some upwards. It's more demand driven. Parallelly, we have also seen some very good project launches. So it indicating there is good amount of bullishness among the developers. The pace of introduction of new inventory also continues, which reflects the market is buoyant, the confidence is buoyant. Parallelly, we have seen overall development potential of lands across various corporations in Maharashtra increasing, which is a result of proactive government policy to increase FSI. So supply likely to remain strong. And I think so overall, the trend of home buyers, increasing their purchases, so it is reflecting the confidence of the buyers to buy with developers with a delivery good track record. And now we all know we have seen a lot of consolidation in last couple of years, so which reflects that the home buyers have confidence with developers who are now executing. So 2022, hopefully the year of optimism. I think it will be good to hear from all our panelists. Maybe we start with more developers view. Mr. Puranik, since you have seen continued strong sales in 2021 in Pune, what according to you are we looking for a sustained momentum and years to come, the best years to come for residential real estate in Pune?
Hi Piyush, hi everyone. Afternoon to everyone. So Piyush, yes, I think let's understand that last decade was a lost decade, as they say, for real estate. But I think the decade belongs to real estate. It's not only, I think, stamp duty cut, which everybody thought is going because of which is the going has been good. But I think post that also the markets have been performing better and better each month. And I think this will continue not only for next couple of quarters, but I think if not decade, at least we have 5 years of phenomenal years for real estate. Demand have been good. Demand has come back, and I think coupled with that, we all know mortgage rates at 6.75, 6.5, that kind of rates. COVID induced demand, pent up demand, and the markets have been quiet for a very, very long time. So a natural correction of 20-25% has happened. I think all these factors have come together at the right time, and I think that's why we are seeing this bounce back in demand. Yes, there is a little bit of increase in the input cost, but I think across markets we are seeing that the prices have been moving upwards, and then they have to, because the inventories are getting finished as fast as possible. And if you check any inventory overhang in any market, any micro market, they are at one of the lowest today. And I think we will see a good price appreciation also from here on. So all in all, fantastic, at least 5 years for not only Pune, but real estate as such for most of the markets in India.
Thanks, Shaileshji. Mr. Jain, your thoughts, and more specifically, what are the key drivers in Pune which is driving the demand high?
Good afternoon, everybody. Thank you for having me here on this panel. I believe Pune today in India, all 7-8 cities what are doing real estate well. Pune is doing the best because Pune has a affordability, better climate, better job opportunities, and it's a cosmopolitan crowd. So people migration, whatever migration happening to India, majority you find people comes to Pune and they love the Pune as a city. So I'm finding that requirement of that migration population which is coming to Pune will continue the demand for Pune, and still the price is still affordable in Pune compared to Bangalore or Bombay or Delhi. So the price is also very, very affordable in Pune with the better climate condition, better livable city in Pune. Traffic is still, like Bangalore is a better city, but traffic is a nuisance. Bombay is an affordability issue. So similarly, Pune is balancing both the things. So that's the reason why we think coming 5 years will be excellent for a Pune market.
Yeah. Thank you, Mr. Jain. Irfan, coming to you, you all have supported all the struck distress projects by giving last mile funding. How has been your experience specifically about the Pune market in terms of deployment, challenges, sales with the project which you have funded from SWAMIH Fund perspective?
So I agree. Hi. Good afternoon, everybody. I completely agree with what my fellow panel members have mentioned. Right, the Pune market is doing well. The good news is that we haven't really done well in Pune, and we are a stressed fund, which means that there are very few stressed projects in Pune. We have given approval to about 108 projects, which will complete about 60,000 homes. Of that, there are only about 3 or 4 projects which are from Pune. Right, so that tells you that less than 5% of the projects are from Pune. So one, it does. It does corroborate what the other panelist members have said. From the other side of the table, as a stressed fund, we are doing very little business in Pune. That's good news. But we are always there. We are not asking for stress, but we are there to help developers. The government is more than committed. We have about 15,000 crores to deploy. We've given, like I mentioned, about 108 final approvals. We have, in fact, given preliminary approval to about 250 deals. We hope to complete 150,000 homes. We've completed about 7,000 homes and so on. Right? We would definitely love to see more proposals from Pune.
So that's so actually good to hear, Irfan, that Pune as a market has given you least number of proposals compared to other markets. So, but Irfan, since you see the data across pan India, since you're invested across, from the performance perspective, and if at all you would look at more 12 to 18 months, do you think Pune kind of stands out in terms of sales and supply? If at all you would just do a like-to-like comparison with other markets?
So absolutely. I think where the Pune market differs from most of India is that, they are not mere launches that are happening. There are launches and progress in construction that is happening. And while that might seem a natural thing, it's not natural for the rest of the country. So in Pune market, there is significant construction which is happening, and then there is buyer confidence in a building where construction is happening, right? And my apologies, I am a salesman for the SWAMIH fund also. So let me also mention that even for projects which have seen some maybe a slower velocity compared to the rest of the market, the presence of a lender like SWAMIH, who comes in with the promise of complete funding or construction focused funding, the promise to complete everything without any further dependence, etc. We've seen that we also act as a catalyst for collections and sales in the projects we've come in. And that's especially true in Pune. So in the projects in Pune where we've come in, we've seen very good sales and collections to the extent, commercially speaking, again, bad for our business. Our funds getting deployed is much lower than what we had anticipated. But good news for the market again.
Yeah, absolutely, Irfan. Pankaj, coming to you, you see data across markets more from inventory overhang perspective, and especially in Pune, we have seen the inventory overhang going down, right? And that is across all the products, be it luxury, affordable, mid-market. So what kind of trends you're seeing from and if at all we compare with other markets from a data perspective?
So if you see that Pune is clocking close to 50,000 unit sales, which is probably the second highest across all top 8 cities in India. It's doing better than Bangalore and NCR also. NCR, if you see the geographical, expansion is quite large. But despite that, the overall absorptions in Pune is much higher in comparison to NCR and Bangalore. Second to Mumbai. Mumbai is highest in that term. And largely driven by stamp duty reductions given by the Maharashtra government, affordability, and many other reasons, which other panelists has already spoken. Second important aspects which is there, it is the third highest inventory. So if you see in the perspective of like NCR is spread over 44,000 square kilometers, MMR is spread over close to 5,000 square kilometers. Pune's actually spread would be in the range of probably 1,000 to 1,200 square kilometer. In that sense, the inventory as well as sales both are growing, and that's basic reason it's considered to be the most productive market in India, and it is going to be there. So the affordability will be maintained because the reason the size of the inventory is high. But having said that, the inventory overhang is also not very high because the absorption is also in line with the magnitude of the inventory. So it's a very interesting market. It's like contributing to the real estate industry, as Irfan has said that, because it is a productive market, construction progress to the sales, all these things continue. So unlike many other like NCR, other markets where supply grows but the volumes don't really grow, and that's where the stress comes. This market is comparably lesser stress, and I completely agree to what other panelists also has said, that it's very productive, very close to Mumbai, and so if you see that it's a options to the people who can invest into Navi Mumbai, they can invest in Pune also, and Pune is a better offer because the same price range you get more developed location, livable location in comparison to what you get in the same price range in Mumbai. Those locations are actually far flung and lesser developed in that sense. So quite a lot of things which are working well for Pune, and it looks like it's going to be in the near future too.
Yeah. Thanks, Pankaj, for the insight. Anuj, coming to you, and if at all we just see, we have discussed a lot of macro factors, which is driving the overall sales across markets and also some Pune specific factors. And if at all we look at some other asset classes which also are driving demand for housing, for example, office. And, we have seen certain large developers taking positions to do large business parks in Pune. So your thoughts on, something like office also driving demand, apart from, other points which you may have for the demand in housing?
Thank you, Piyush, firstly for moderating this session. And also a very good afternoon to the panel members that are there with me today and to all the viewers who've logged in virtually. Piyush, I think as an opening, I can tell you that I come with a very positive outlook towards the residential outlook over the next decade. I think if someone looks at the history, like you set the tone, for the last 10 years, I think residential has seen its fair share of stress. We had demonetization, we had RERA, we had a couple of roadblocks. And I think the only way this sector could have grown was with these kind of matters coming into the front, because they have actually brought together a lot of transparency in the residential segment. I think RERA, like I think one of our panelists said, that's something which is very, very important to bring in transparency. And I think that's really driving a lot of momentum. When you talk about sectors, the most specific question that you asked me, Piyush, the Pune market as an economy is very, very diverse. From being an education hub to actually being a very strong manufacturing and an auto cluster historically, I think the IT/ITES market as well is extremely strong. Over the COVID period, has shown a lot of resilience and growth. So we're seeing increased amount of jobs that are being created via these sectors. All that I spoke of, from the auto to the IT, we're seeing R&D come in the forefront of things. And Pune, with roots down to pharma, I think the biotechnology also cannot be ignored. With these factors, they fuel in demand consistently for residential, in my view. Over to you, Piyush.
Yeah, and just follow on Anuj on this, and if at all we extrapolate from office to industrial side, warehousing side, do you think that also is a big catalyst for peripheral demand for housing?
Massive. You make a very, very good point, Piyush. As I said, I think the industrial and logistics sector is a ever growing sector. While most markets saw some kind of a decline during the pandemic, the residential and industrial and logistics actually saw growth, with 3PL constantly expanding their footprint, coming with last mile connectivity for the end users who were sooner than later getting digitally more savvy in their buying behavior. We've seen a lot of warehousing and industrial growth across markets in Pune. This has led to peripheral demand. The suburban areas like Chakan, Talegaon in the north, or you look towards the and extensions of Shirwal, we're seeing consistent activity out there from the industries that is fueling demand. And the government initiative taken for affordable housing, or housing for all, has further accelerated this position.
Thanks, Anuj. Mr. Jain, coming to you and talking more specifically, among the newer markets which are developing, and maybe Anuj mentioned about from a periphery perspective, Talegaon, Chakan. Now, from your perspective, and if at all we look at horizon for next maybe 3 to 5 years time, which are the emerging markets from a housing perspective you see, and both from a affordable perspective and also from a mid-market to luxury perspective?
Okay, as you know, the market start from IT. The IT, wherever the IT comes, the market grow in that area. So typically in Pune, it's very clear. East and West was the IT. So Hinjodi and Kharadi was the IT development was coming up. All the new developer, what Mr. Anuj recently talked about it. So 80% IT development is coming into this both market. So in coming period, the west part, which is Wakad, Baner and Hinjodi, and eastern part, the Kharadi, Bagoli and that area will be the most emerging in coming 4-5 years.
Sure. Shailesh, coming to you, and if you look at more specifics in terms of trend in size, what kind of trend we are seeing, and we have definitely seen that the flight going more towards a better quality, larger size, more community living. So what kind of trends we are seeing, and more especially in Pune market on this?
Yeah, Piyush, I think couple of important things here. I think gated development, community living is something that people are finding favor in, because whatever lockdown we faced 3 to 6 months, everybody understood that you're just staying in a single building apartment. Then there is no walking area below, there is no jogging track below, there is nothing breathing space below. So all that you don't have a area where you can all gather, go together, with the safety of a gated community. So I think that is for sure. I think future belongs to, personally, I feel, mid-sized projects. So, the projects anywhere between 1.2, 1.5 to 2, 2.5, 3 million square feet kind of projects, rather than very small projects, 1 or 2 or 3 buildings, and rather than a very, very large sized township projects. Yes, they are, something that people fancied, but I think from the lot of other perspectives also, regarding the planning your cash flow, especially for developers or for lenders to, do the valuation and all, it's very difficult to do a valuation that you're going to sell 7-8 years down the line. So raising finance and doing financial closure for your projects, from all that perspective, I think this mid-size and community living that is one. Two, yes, there is a shift towards a slightly better sized apartment, but that is varied. In some pockets we do have seen that you want a slightly bigger size apartment, but also in some of the other pockets we have seen that there is still demand for a smaller size apartments. Ultimately, if you are looking at a mid-income, mid-segment of housing, it's ultimately the ticket price that people are looking at. So that is another thing which is very, very important. It has to be something affordable to them. If you go to larger apartments, premium, yes, there is this demand that there has to be a the work from home office in your in your home. So, and it's not only one, because if you are staying in a large apartments, both husband wife working, or a son is giving exam or something like that, not one but 2 or 3 kind of at least office desks or office spaces is what people are looking at. So I think that is 2. But I think third point that you talked about, quality, brand name, I think these have become hygiene, Piyush, now. You cannot just compromise on that. It's also because of RERA coming. It's also because of the 5-year that you have to, give service and all that. But it's also that people do understand, people do check what kind of projects you are delivered. People do talk to people. Social media, people become very, very active. So understand that, okay, there are a lot of issues in this building with the seepage issues, leakage issues, maintenance issues. Lifts are not, of good quality. And I think that is hygiene now. So that is something that you must give. I think these 3 things is what I think going forward, we have to keep in mind. I think we are going into a mature market, and I think that pace has increased a lot because of whatever reason. Even the COVID kind of accelerated this pace. So what I mean by mature market is customers are savvy, mature, looking at their due diligence, looking at developer, looking at property, looking at value for money. All that is kind of come together. So I think all these things we need to keep in mind going forward.
Sure. And just Shailesh, just to follow on, and I think so you also made a point on size of apartments. On an average, are we clearly seeing that a person maybe who was buying a 500 square feet apartment, say pre-COVID, now the same customer is now looking at 700 square feet apartment? And are we seeing that across all the segments, whether it's affordable, mid-market, luxury, that people want bigger size? Is it a bigger trend which we are seeing, maybe Pune or even across markets?
Piyush, frankly, although there is a lot of talk about this, and we have done some initial work on this, we did a lot of surveys, we talked to people, and it's not only that, it's the proof of pudding is in eating. What kind of sales are happening. So at least in mid-income segment, I still don't see that from suddenly 500 people are looking for 700. Ultimately, it is the as I said, end user price is what people are looking at. Yes, they might ask you whether you have a provision for an office desk. All the necessary things are planned. They will want to see your interior layout for them to figure out what is that they can do. But especially in the mid segment, but in the premium segment, yes, if you check a lot of data, the higher size, larger size apartments are flying off shelf, not only in construction, of course, in ready also. There are a lot of inventory in ready position apartments in the larger size 3 BHKs and 4 BHKs. Their demand for larger size is definitely here. But of course, as a percentage of demand, it is very less. If you look at the parameter, the percentage of demand is very less. But yes, there is a trend for higher size apartment in the premium or luxury segment.
Sure. Thanks, Shailesh. Irfan, your thoughts generally, from an investor perspective, does a market like Pune, gives you a more safety net because of its affordability index? And what I mean is, if at all you're looking at investments across markets and when you compare that with Pune, markets like Pune, because of its affordability and whatever, drivers we speak about, does that give you more confidence to invest in Pune?
So from an investor point of view, right, depending upon the risk and the return you are willing to take, you can segment the market. And I think Pune again is a story of two markets, like Mr. Pankaj Kapoor normally says, in the rest of India, where there are the more established developers which are seeing all the positive after effects of the pandemic. The customer affinity, the customer inclination for a larger size, customer inclination to close, and so on. And there is another, world, real estate world within the same market, where there is a crisis of confidence, where project cost increases, are a death blow, right? The more branded developers, the more successful projects can take project cost increases in their stride. In the last 1 year, almost across the board, and I don't think Pune market is any exception, we've seen a 15 to 25% hike in project cost, in the cost to complete in most projects. This I'm not talking from publicly available data. I'm talking from data that we have from our own portfolio companies, right? The better developers, the bigger developers in the bigger cities, are able to influence or to command better capital values, and therefore ride through this price increase. That is not true for some of the smaller developers who are now beginning to see the strain. And it's a combination of both smaller developers and smaller cities. Pune has an advantage. There is a large number of good mid-income projects, and also there is a large number of good affordable housing kind of projects, generally speaking. So depending on the risk appetite of the investor, with a branded developer, you very little risk in terms of velocity, sales, and all that, but very little returns as well, right? And more 18 to 20% returns from taking a bet in projects where the project is still under construction, etc.
Yeah, I think Irfan, you made a very valid point on say input cost. A 15 to 25% increase in project cost, right? And for markets like Pune, which are relatively lower margin if we compare with markets like Bombay or Gurgaon. So this can definitely impact the overall pricing in the market. So Pankaj, coming to you on this point, and markets like Pune may remain sensitive to the pricing, very elastic to the pricing change. How bigger the threat to demand you see, if the prices were to go up, from an input cost perspective or otherwise, to impact the overall demand?
That's why I say that, 2-3 angles which you need to see this, market is highly segmented. There are large developer and there are many smaller developer and mid-sized developers, and the size of the inventory itself has been growing. The new launches are there. Pune is the one market where probably maximum number of township projects, like NCR, you find most of the projects large size, but in Pune, if you see, you have lots of township projects which are coming. So the supply flow, it's also suggesting that there is going to be pricing pressure for this. I feel so, since this is a productive market, construction continues. It's not like that the builders are selling and not constructing. So in that case, my own sense is return through the IRR in by way of investment in the project is still possible, because the reason is you have predictability. The builders will really construct and look at that. But in terms of the price appreciations point of view, since this is highly elastic market, large size of the property, it's a circular market. So you have got many micro market interacting with each other, and the demand may really percolate from one place to another place if the price continues to be rising, and there are enough kind of a competition which is available and choices are available among the to the consumer. So the price rise driven appreciation looks really difficult, but IRR driven returns, I do really feel if you invest into the properties, it's more productive and predictive market in that sense. And that's my own point of view. I see that there are ample opportunities available. Maybe the fund houses may have to reduce their expectations of the returns to some extent, considering the margins are really thin, so the risk and return point of view, if we were to have a look at it, so if this is a lesser risky market, so it may probably give you lesser returns in the sense, but it will be more, you are more likely to get the returns rather than anticipating and not getting it.
Yeah, no, absolutely, and I'm sure in a current margin, the potential to increase returns is anyways very limited. And just Pankaj, a follow on, and we spoke about elasticity, right? And if at all we compare Pune market's price elasticity with other comparing markets, something like a Bangalore or a Thane, right? Do you think there's any difference between purely from the price elasticity perspective?
I think not much. Bangalore maybe, because Bangalore is highly inconvenient and it's really becoming a micro market perspective. But my own sense is if the metro connectivity improves, it will improve the efficiencies of the cities, and then the market will become much more elastic than what it is there. Why MMR is most inelastic? Because the reason it's been a linear city. And the question is that as more and more infrastructure getting built and the more connectivity is happening, you see some of these markets are losing their inelasticities, in the sense like Worli market has not really appreciated for last 10 years, but Bandra did. And going forward, once the coastal road and the metro will come in, you would find the places like Andheri and other places will grow up, but the Bandra and the Worli may continue to be having pressure on this. And that's kind of a outlook I'm seeing to most of the cities. So all the circular cities with the metro, you would find the elasticity to improve. So the Pune, Bangalore, and Thane may probably be offering more affordable homes, large amount of the supply, but very unlikely we may probably see the kind of a price rises what happened in last 2 decades.
Yeah. So I think interesting point, Pankaj, and we speak about infra developments, and with infra developments, the entire any city's pricing is converging towards median, right? When we say, if we take Bombay's example, with the coastal road, metro coming up in next couple of years' time, the price difference between a Borivali in north or a Bandra in mid or even in south, it's kind of, become like a unified pricing.
Yeah.
So,
gradient is getting reduced. So if you look at it, it's becoming a flattish market situation. So maybe very premium location where the demographic densities is very high end and all those things may probably show high end prices. But wherever we see ample land and homogeneities of the demographic, you see it's becoming highly flattish.
Yeah. Shailesh, you also see this, trend of, the pricing now is being driven more in around infra development in next 2 to 3 years' time?
Yeah, absolutely. I think, just to give an example, I think you talked about Thane. We also operate in Thane. There was a time, a decade or more back that, Mulund was Mumbai. So the prices in Mulund, whatever happened are always higher than prices in Thane. Or then, of course, more recently that, I remember 1.5 decade ago, we mentioning that our project is 7 kilometers away from Thane station. Our project is 5 kilometers away from Thane station. I don't remember when was the last time I mentioned what is the distance from train station for my project. There are projects in Pune or Thane that one project is selling in the tune of 15,000 rupees and the another project in the vicinity is selling in the tune of, even 10,000 rupees. So I think, as I said, we are entering a mature market. We are where these boundaries are becoming, invisible. Also, if you see some trends, like if you would have seen a decade ago, always you will have appreciation in the property, and then the new under construction would be at a lesser cost than ready possession apartment. Now, in many cases, ready possession and under construction are priced similar. In fact, if there is a new project coming up, it might command a price premium owing to newer amenities, probably what happens in the developed countries. So as I said, we have kind of jumped 1 or 2 decades into, markets getting mature and more mature. I think that's what we are seeing in the market. And I think it will be the product, the price, the product, the developer, the brand, the kind of amenities and the quality that you're giving. I think that is ultimately going to decide the price, and not so much as only the location or some of the other factors that we talked about.
Sure, Shailesh. Mr. Jain, your thoughts, and maybe more specifically about Pune market in particular on infra, because now we're going to have 2 metros, connecting to different segments. How you think that's going to evolve the overall housing demand?
Let me tell you, Pune is as on today, we are in a worst situation. Pune does not have any one single ring road, and not a single metro is started in Pune. But yeah, we can see very, very bright future of Pune. 2 ring road is already planned and land acquisition is started in big way. PMRD coming up and taking the PMRD and MMRD is doing both the ring road. So we are hoping that ring road we'll see the coming up in very short period, maybe 2-3 years down the line. And all 3 metro is started. So work is in very, very advanced stage. So both the infrastructure will give us a lot of supply in Pune market. And because of this 2 factor of ring road and metro, already Pune is number 2. I think we'll come at number 1 very soon.
Sure. Yeah. Thanks, Mr. Jain. Anuj, I think there's a lot of being discussed about the shared spaces model, right? And which is kind of driving, demand for different segments. And Pune market in particular, co-working, I think is possibly doing the best compared to all other markets. And then from a housing perspective, we have maybe senior living, student housing, co-living. How you think, and considering Pune as a market is a more IT-driven market, it's also a good education hub. So from that perspective, how do you think, especially this alternatives, what we speak about, like a shared spaces model, is evolving in Pune?
Piyush, I think that's one of the most accelerated platforms in commercial real estate today. It's largely spoken. Over the last 5 years, the advent of flexible office space has really grown manifold. We've seen the percentages grow from about 5% and go as high as a double-digit 12 to 13% on overall office absorption on a year-on-year basis. We're seeing top corporates really evolving in their corporate real estate strategy. They're no longer looking at the flexible domain as as just a co-working segment. There is this entire domain that has really innovated itself. They come up with agile space solutions, which are more managed solutions. They can literally build to suit your office, and then be totally dictated in terms of design, ethos, and in terms of security of your IT infrastructure, based on what you really desire. And the more we are interacting with large multinationals, I think in today's world, they're looking at flexibility. They're looking at agility portfolio that are probably capex shy at times, and the flexible domain really comes and plugs all the gaps. So in our opinion, I think flexible space is here to stay. It's going to be something commercial real estate, and we're already seeing green shoots of it, with some large companies, making very large news globally as well as in their private equity infusion over the last 4 to 5 years.
And I think you mentioned about private equity, and this is any particular asset class, or you think is generally the attractiveness of cities increasing? So we may see, equity coming in maybe across asset classes, be it housing, office, or industrial. Anyways, we are seeing.
To your question, I'd like to take it macro. I think firstly, India is getting very attractive in the scheme of things. Increase the transparency that we spoke of, the other panel members as well touched upon. I think there is confidence in wanting to foray into India, invest and make big bets on India. And this we're seeing across asset classes. We've seen the residential sector obviously seeing the latest trend on it, but the commercial retail, and the industrial sector have established itself for the last decade or decade and more. And more cities are coming into the foray with new tax swaps. I think there is clarity in this budget, CZ advent as well, which everyone is eagerly waiting for. I think we are in for a good drive over the next 5 years for sure.
Yeah, and I think just just extending this topic on the capital, and Irfan, you mentioned that Pune possibly is giving the least of the capital because because of the performance doesn't require it. But if you and since you have data across markets and for last couple of years, how you think this trend of projects getting self-sufficient in Pune is likely to continue? Or you think there will be some gaps and this kind of funding will be required from fund like yours?
So I think as project costs increase, right, Pune, the capital values are relatively subdued. The margins aren't as comfortable as they are there in maybe some other markets in the Mumbai market and so on. There will be a greater emphasis on construction timelines, construction efficiency, to keep costs down, because you mentioned price elasticity may not be there. So to keep costs within control, because the customer could turn to the next micro market or a customer, the developer is not necessarily dictating prices to keep cost under control. Construction has to be revved up, and that's where you would understand and appreciate, the SWAMIH fund comes into play.
Yeah.
Right. Our focus is only on construction. Our focus is providing construction capital, not just to stalled projects. So that's something that I want to clear the air on. It is to any project which is stressed, which sees an impeding or an impending cash flow mismatch on the horizon. And before you get into difficulty, the smart thing would be to reach out for capital from the SWAMIH fund.
Sure. Thanks, Irfan. Shailesh, coming to you, and again, extending this discussion on capital. In residential, we haven't seen any significant equity coming in, on a pan-India perspective. And I think the reason that being is, there is not enough risk reward from an equity investor perspective. But now with the current state of affairs where the demand is back, sales are good, across markets. You think you will see a good amount of equity coming in residential real estate, and also more markets like Pune, Thane, Bangalore, and I speak about these three markets because from the affordability perspective and sales perspective they are much better.
So Piyush, see, I think I have slightly different take on this. I think it's not important what kind of capital is coming in, equity or debt. I think what is important is now. I think the point that Irfan was making, the capital like what SWAMIH fund is talking about, that is important. With the kind of even judgments that you're seeing by courts, ultimately everything is, towards or in the favor of the consumer or the customer in the end. So although we have, fight between who's superior, RERA or, the NCLT or that court, but I think ultimately the judgments that we are seeing is they are keeping in mind the interest of the end user or customer. So what is important is that you keep on building, as Irfan was talking about. Construction has to keep on happening, and it has to happen at a faster pace. Now, what has happened in last 2, 3 years, 4 years, because of course the IL&FS crisis, and after that the the capital crisis that we had, and NBFC crisis, and of course the COVID hit after that. Many, what to say, the funds, those who want to lend money are kind of in a retreat mode. And then the model that they had, so one was a plain vanilla debt, if you all know, that is you have to do monthly servicing. Then there's of course structured capital or a structured debt, or then there are talking about equity, which is not, I have not seen a pure equity deal for a long time, at least for last decade. So equity, but again, which is in the form of structured debt, where you talk about higher teens or you exceed 20% or 21%. I think interest rate or coupon rates are no longer important. I think what is important is the way the capital is deployed. What is important is there should not be a dearth of capital for constructing. Once they are sold, you have to keep on constructing. The capital should go there. And that is how the structure has to work out. Unless you have that, we will see further challenges. So the bottom lines are impacted. They will keep on getting impacted. We are in a highly commoditized market. We don't know. So although, there is a no price rise, but we don't know when the next sudden price rise will happen, or whether it will happen or not happen. Nobody can predict. We can look at the past data, but we don't know what is going to happen in the future. But it seems that, a gradual price rise might be there. So in such a scenario, the right kind of capital being available for development is very, very important. And what is right kind of capital? Forget about coupon rates. What the right kind of capital is, because of which the construction does not stop. Why, fund like SWAMIH is coming in? Because of the problems of the existing lender. The project is right. There's a good cover available. There's a positive cash flow going forward. But still, a lender is not lending because that lender is not able to lend because he has a problem. The current problem of last 3-4 years is more due to the lenders and lesser due to developers. And of course, developers are, blamed, and whatever RERA blames everyone, they are escaping, whereas the problem lies with them. So I think it's more and more important that we understand that during our negotiations with our lenders or capital providing partners, etc., and it's better that they understand it as soon as possible. That's how it has to be structured. Financial closure has to be such that till the construction is completed, there is no dearth of capital. And then, of course, you look at your IRRs, your coupon rates, what you are making, a waterfall structure. Okay, you make, after that only developer makes. I think those are all immaterial today. That's what I feel.
I think Shailesh, absolutely, because having the right form of capital, I think so is very important to avoid mismatches. And I think so all the troubles of the crisis which we have seen in last 3, 4, 5 years time is because of having the right pool of capital for right end use. And when I think it was good to hear from Irfan also mentioned that it's just not about stress projects, right? Wherever execution capital is required, SWAMIH fund, I think so will play a role. Right.
So Piyush, if I can just add to what Shailesh so brilliantly put across, right? Even that the entire focus of funding from a fund like a SWAMIH fund is construction, and it's easy to talk about it, and we walk the talk when we do the funding in the form of NCDs, where there is no return expected back to the investor till the project is completed. So all the money. Even money from incremental sales and collections are pumped back into this. So as a result, I think what's most important is results often talk better on the success of a strategy than, strategizing itself, right? So we have been able to complete, already we've been able to complete about 7,000 homes. We are on a run rate to complete about 10,000 homes every year for the next 3 to 4 years. Our sites have probably the highest worker density when compared to other construction sites in the same city, because we have all the money that is required to. Normally, a developer will fund or pace construction according to the velocity of sales that is achieved in that project, right? So if it's selling, there is more money available for construction. In our case, it is money is available in the beginning. And therefore, we insist that work happens at multiple points in a site. Work happens, at various levels in a site, and therefore highest worker density. And we've seen in all our projects that, when we have a developer business plan on completion of the project, despite everything that you've heard, read, experienced about COVID, our projects are getting completed faster than we had, originally planned. So that focus on construction, really helps. I completely vouch for, what Mr. Puranik mentioned on this aspect.
Yeah, and absolutely. If the project gets completed, I think everyone walks home happily, whether it's the end user, buyer, lender, developer. So I think so with that focus, I think it's very, very important that everyone focuses on how the project can be completed very fast. And I think so absolutely, I think Irfan, you articulated, and Shailesh, you also mentioned that having a right form of capital, I think is very, very important. If we just not talk about what kind of opportunities, are available from a developer perspective, in the current market situation. And we have definitely spoken, there's a consolidation, and it's a phase where the better managed, better governed developers will possibly have more and more opportunities. And if at all we talk about market like Pune, which again, as a good spectrum of developers, Mr. Jain, from your perspective now, what kind of newer opportunities, from a new business development perspective, you are viewing? So sorry, you're on mute.
Sorry. Yeah. Pune, the new in Pune and Maharashtra, especially the new UDCPR rule has come. So virtue of that, the FSI supplies come threefold and fourfold, you can say. So whatever land bank developer was having, so that's become a one big opportunity for them, first of all. And apart from them, there's a huge new property, new projects are available in the market. Pune has a less project which is stuck. So that kind of project is very, very less available in Pune. If you go in the market, you cannot find a 20 project which is stuck like NCR or any other market. So we have to look for a greenfield project, and there's a plenty of opportunity available in Pune especially because of new DCPR rule. Any project on a 1 acre plot, you can consume up to 1.5 lakh square feet area. So that's a huge opportunity.
Yeah.
And infrastructure development also happening, the ring road and the all ring road development coming. Yeah.
Yeah. And from a, considering the opportunities available in a market like this, would you more prefer, and since they're available, more joint developments or joint ventures rather than, acquiring lands and putting the capital upfront?
Because the construction cost increased in the last 1.5 year, 2 years, around 20% compared to the 2020. So joint venture has become a non-feasible, very, very not very attractive proposal nowadays, because still the landowner thinks the construction cost still is 2,000 rupees, which is not the fact. And so present condition mein, neither stamp duty also does not friendly with the joint venture document. The GST is a different problem if you're doing the commercial joint venture. So joint venture is not very, very attractive option right now. Buying a land or some different kind of structure can be done. That's the only possibility in nowadays in present market condition.
Yeah. And, you mentioned, and that's a fact that, the overall FSI, across Maharashtra, has increased, and which will eventually also increase the overall supply. And specifically something like in Mumbai, what we had a reduction in, premiums up to a specific date, so which saw a lot of approvals coming in. So the question is whether, the supply, and maybe Pankaj, maybe you can, answer that. The supply will increase, right? And all this supply will possibly see next 2 to 3 years time coming in. Will this, supply scare us? Maybe we may not see that coming immediately, right? But maybe in over 2 to 3 year time that we're going to have, millions of square feet coming in, and in a market like Pune, which is relatively smaller, there the demand supply could, completely go in favor of supply.
Piyush, if you see that in 2009 data, we have the top 8 cities, we had just 3 lakhs units unsold stock. And we still haven't seen the new proposed supply coming in, but we have around 9.5 lakh unit inventory in these 8 cities itself. So supply over a period of time has really increased, and largely it has increased because we have done extensive financialization post liberalization of real estate in 2005. So a lot of land has been accumulated, and those land is coming under for the productions and all those things. And my own sense, it will continue to be. And secondly, when it comes to supply demand mismatch, we are still a housing shortage country. Okay, so there is no dearth of the demand in that sense. So more supply means that more absorptions, more volume will take place. Like Pune has clocked the highest sales in this pandemic year. Maharashtra has also clocked a similar kind of thing in this pandemic year and all those things. So that means that if the affordability is met and there is efficiencies, in the overall system, that the volumes and the demand is still existing. Only thing which is there, that the expectation of the price rises may not be there. It's a time for the volume, so that means it has to be, the production has to be highly efficient, unlike the past where the approvals would delay the projects. The land would not be purchased at the highest cost. Like there was a time, we look at how we became inefficient, because the land was being bid and overbid and then being purchased at the highest price. And a lot of those land purchases made the projects unviable and things like it. And then extensive funding to those projects has happened and they became stressed, and all those phenomenon has gone away. As Arvind ji was just mentioning, that he started thinking about not going into the joint venture, which was actually a trend a year or 2 years back, and things like it. So everyone has started thinking about financial viabilities, prudent approach of development and things like it. So I do see that the pricing pressure which will be there, but it will be a different environment of developing. It would not be the one where the builders would see that 50% margin or 30% margins on that projects to do the projects. Volumes will be there, but with the 15-20% margin, there is enough market for the productions, and then there is no dearth of the demand in that sense. So it's like that, like the market will become flattish, highly efficient, both in terms of communications and in terms of productions, and that's where the consumption will take place. So it's like that many industry which has really grown over a period of time will see the real estate market's growth. It will not be price growth, it will be production growth.
Yeah. And, and the markets, which are say below 8,000-9,000, which possibly have a, lower margin. Maybe the FSI maximization, which has been the trend across markets and markets, mainly in say Mumbai, Pune, may not be there, because these are price sensitive. More you want to use the FSI, you may have to go vertical. FSI is kind of increases multifolds. Right. So maybe FSI maximization is not the objective. And Shailesh, your thoughts, on this, with supply coming because of increase in FSI and, for a large projects, whether is FSI maximization, which was the trend, will that be any more that it's more now on efficient product, more community living and giving a better product rather than, just, using the full FSI and making like a concrete jungle?
So I think first, Piyush, I must say that, I've seen Pankaj positive after a long time. So
I've been there for almost 2 years.
Then real estate is becoming positive. That much we can guarantee.
I've been there.
So I think FSI maximization is not, I think it's long gone. I know personally in most of my projects, I think FSI, I'm not consuming the entire FSI. It is impossible for me to consume that FSI unless I go to, in some places the height restriction is there, which is good, because otherwise I would want to plan a 50 or a 60-story building. So I think FSI maximization is not something what we should look at. FSI is increased so much that, I think that any developer that I talk about, they are, I think, leaving something, and then the working is that, okay, which FSI I leave so that, my FSI cost is, kept minimum, whether it's a premium FSI or whether it's TDR, etc., etc. So that is not something that you need to look at. But one good thing, probably we all miss sometimes, that although the costs have gone up, this new increased, new benefits like premium cuts has, given you a substantial margin there, that your margins have increased if you avail that. Two, because of the FSI increase and whatever you are able to consume. So from 100 is become 200, but I am able to consume 150, let's say. I have made provision, and that too in a reasonable height of a building, etc., etc. So your FSI cost has gone down. So whatever construction costs have appreciated or gone up rather, they are more than offset by the changes or the reduction in the FSI and the approval cost. I think that is something that we need to keep in mind. That's why you have not seen the kind of price rise probably you should have seen, because the demand is back in the market and the input costs have gone up. But of course, FSI and land costs approval costs have slightly come down, kind of offsetting that. But from here on, now they are fixed. I don't think they'll go down further. And then you will definitely see whatever happens with Ukraine and Russia and the dollar and the oil. Seems less likely with every day passing. But you might see the price rise coming in. And price rise will also come in because Pankaj is saying so. And price rise will also come in because the inventory levels are coming down. Sorry, Pankaj bhai.
I think it's all will have smiles when we talk about price rise.
Yes, yes.
Yeah, and also the barometer, for a good market, I think there's no more the price rise. I think so. Everyone possibly will agree. I think it is the sales and the confidence of and sentiment of the customer that people are willing to buy. I think that is the key. When in last 12 months time, except a few percentage points where the prices may have gone up, but I think so. Why people remain buoyant is because the absorption, the sales is happening. And now capital is there with Irfan articulated that right pool of capital for execution. We also have deliveries. And just one point, your thoughts on the kind of opportunity which you see in the market from a new business perspective. Being asset light, is the norm, because these are the kind of opportunities available, whether it's the stress of some owners, developers, or stress maybe of some bankers who've been holding some assets. You think from a developer perspective who want to grow, this is the thing which we'll possibly see in next 2 to 3 years time?
No, it is already happening in the market. I think there is. I think we forgot talking about it. It's a K-shaped recovery. I think one panelist did mention about it. So it's not that everybody is getting the benefit of the better markets that we are seeing. There are many who are still struggling for various reasons. So because of this K-shaped recovery, and because this kind of rebound is available to a select few for whatever reasons that we discuss, there are many people who are suffering because of the lender issue, approval related issues which have cropped up, etc. And then that have became difficult for him or her to continue with the project. So I think those kind of opportunities are ample in the market. There are already deals happening in those kind of spaces, either through a lender or to the developer. But I think Arvindji, mentioned an important point. This asset light model or a JV model, because of the price, the construction cost and input cost increasing, we have to be very, very prudent now. I think Pankaj did mention that now a lot of prudence has come in, I think, which is rightly so, because all of us have burned fingers by doing a 30% and a 35% and a 40% and a 42% kind of JV, and now those look unaffordable. And I think in many places developers have renegotiated the way tenants have renegotiated in malls. We have renegotiated our JV deals, and I think going forward, a more prudent approach, a better commercial term and understanding, which is also linked to the end user price as well as to the construction cost, and based on that you kind of work out your JV deal or asset light model. So asset light model is here to stay for various reasons, because it is no longer affordable, or it is no longer prudent to buy land when there is no appreciation happening in the land on the underlying asset, unless it starts happening, because markets have this tendency that it behaves in a completely different way than what we have thought about or what our research shows, etc. So unless that comes in, it is not prudent to buy land unless it is very cheap, of course. And secondly, if you are doing a JV or a asset light or whatever, profit sharing, revenue share, any kind of model, you have to be very, very diligent in the kind of commercial term you are negotiating with your earlier developer or the landowner.
Yeah, absolutely. Anuj, your thoughts, what kind of opportunities, you from your perspective, you see, from a developer perspective?
Yeah, Piyush, I think a lot of the panelists have around the attractiveness of Pune overall. And I'd bring in one more perspective. I think the state of Maharashtra is really blessed in its way to have a twin city with Mumbai and Pune at the cusp of it. And that's where I think Maharashtra really needs to take the advantage of it. The infrastructure development that we've largely spoken of is really gaining very good momentum from where I look at it. We're seeing Mumbai and Pune really in terms of its lines. The cities are coming much closer, and the Pune attractiveness index is already spoken of. I constantly see this as a business development opportunity where we see investors continue to grow in their interest and their appetite for real estate at Pune. The value proposition is out there for everyone to see. The house sizes as compared to, let's say, Mumbai, that couple of panelists spoke of, is another aspect of attraction. We're seeing this as a holiday home destination or a second home destination for people. So I do look at a lot of development opportunities there along the infrastructure corridor. And I think Arunji spoke of the metro. And let me confirm this, that from news articles that we have read, and CBRE is really closely monitoring. We're seeing that 2 lines of the metro will go live by the 2nd March in Pune. Albeit this is a small sect of that entire line that's getting actioned at this moment. I think that's going to be a huge stimulus. The government has announced TOD benefits, and the whole objective of development around this TOD is to make it high density and high affordability. I think that's another opportunity which is not got momentum as yet. But in the next 5 years, we see a vision where this is the business development opportunity for the developer friends that are there out here. And we will see growth on this platform.
Yeah. Absolutely, Anuj, I think so we are kind of getting to the end, of our session, and I'll just summarize some of the key points. I think with all, we all have made, the demand overall, there's a consensus demand remains strong. The lower interest rates are there. Construction is happening. We have some element of right side of capital there's a job creation in Pune. We may possibly not see a price increase, but maybe to the extent of maybe cost increase, we may see that. Supply will be there, but kind of will be followed by the demand as well. Though, and we have seen one of the best years for Pune housing demand in last 12 months or so, and which is likely to continue. We have more better managed, better governed developers, and with all the infra developments coming in, at least the mid market and affordable is likely to do well. Luxury also with a flight to quality and more community living, that also is kind of picking up pace. Sapna, over to you, please.
Yeah, I think that was one of the most positive sentiments that we heard from all our panel members here. One of the questions that has come to us is, will 2022 be the year of tier 2 cities? Starting from you, Piyush, what do you have to say?
No, whether tier 1 or tier 2, but I think so definitely where there is affordability is where the demand is. And I think so Pune, in terms of infra developments, affordability, and the quality of developers which we have, definitely we're going to see that. And it's not only, Pune, we have seen some markets like Thane, we are seeing that in Noida to some extent, we are seeing that in, Bangalore. So I think affordability is key with infra developments, job creation in any market which will create jobs, will likely to, do well. And Pune, over a period of time, multiple industries are there, industrial logistics. So I think it's an overall comprehensive, ecosystem which possibly one creates for a tier 2 or any kind of city to, emerge in, which possibly, market like Pune will definitely, do well.
Okay.
Fantastic. And I just add to that, Sapna. So what Piyush mentioned was, essentially from a demand side, right? We have seen that tier 2 markets have been sidetracked or, considered poor cousins when it comes to availability of institutional capital. And that's where, as a SWAMIH fund, we are striving to make a difference. In fact, we are spread across 33 cities across India, not just in the 3, 4, 5 or 7 metro cities, but, what is referred to as tier 2 cities. And our own experience is that the funding there is, not so difficult. The quality of developers is not very different. The governance, and in some cases, lack of governance norms is the same, whether it's a larger city or a tier 2 city. So I think what will make the difference is emergence of, to some extent, we are leading the way. But, if more capital follows into tier 2 cities, that supply will be more robust and, construction will be faster, etc.
So how do you see 2022 will see more funds going into tier 2 cities?
So, like I said, we are leading the way. It was generally presumed that a real estate fund would have a presence in Bombay, Bangalore, Pune, maybe Ahmedabad, and that's Hyderabad and so on, right? We have stepped into tier 2 cities. We hope to complete about 10,000 homes every year, and a vast majority of them would be in tier 2 cities. So suddenly the viability of tier 2 cities as an investment opportunity, the pilot testing is what we are doing.
Okay,
right? And others will follow.
That's quite encouraging. Mr. Puranik, what do you have to say? Is 2022 the year for tier 2 cities?
No, I think I agree with what both Piyush and Irfan have said. So I think one is, of course, the focus required from government and an institutional capital that has to go towards the tier 2 or the further down tier 3 cities. But I think it is not about classifying them tier 2 and tier 3. It's about what growth magnets are there. It's about what is the political will in that area. Whether the political will is to bring in the infrastructure, political will is to bring in the industry or the another kind of any IT or warehousing or manufacturing or engineering or education. I think that is key driver. If you have that vision, and then accordingly the plans are there, then of course everything else follows. Because if you have that, then the capital will flow in. If you have that, the developer would flock to it. If you have that, customer would come in, and I think you will see a all-round development. I personally feel a generalizing or typecasting, okay, tier 2 is going to do well. I think we have gone past that. I think it's more about the research, it's more about the will, and then accordingly steps being taken by government. Then I think you will see good days for some of these cities.
Okay, so it's no more about classification now, it's about the growth drivers. If you have the growth drivers, if you have the ability and the right products, that is the market that is going to grow. Anuj, if you would like to add to that.
Yeah, so from my perspective, I can bring in another school of thought to what obviously our esteemed panelists have already mentioned. With work from home and most of the large ITITS sectors, going back closer to their families or back to their roots, I think certainly they have decided and realized that this is a good investment opportunity. And with surplus cash, available with them, disposable income available with them, work from home is also augmented for jobs for women and encouraged women to and empowered them to take up multifaceted roles which were earlier on restrictive. I think the cash flows have improved. And I think since the, someone pointed out for a specific question on tier 2, we know the tier 1 story. And I think I agree with Mr. Puranik about, we do not need to segmentize that. But at the same time, there is demand for tier 2 and we see that only growing.
Okay, so reverse migration and remote working might be those growth factors which will fuel tier 2 cities growth. Mr. Jain, your quick addition to what others have said.
Yeah, first of all, after this pandemic, real estate overall has increased the demand, the size. Yeah, either it's a tier 1, tier 2 or tier 3 city. Everywhere the size of the requirement of the housing is increased. So virtue of that, there will be a growth in tier 2 and towards tier 3 city also. Okay. And because
more value for money they can
value for money, and, yes. And they want larger house, they want a well-developed house. So even tier 2 and tier 3 city where there's a township, not township, a large community development or gated community development is happening now.
Right.
So virtue of that, the development is coming, the growth is coming in tier 2 city.
Okay, fantastic.
And I totally agree with Mr. Puranik and Mr. Anuj ki work from home. Also in last year, first time in my life, I have seen people cancelling a house because he bought a house in their town. So otherwise I used to say, okay, he bought my competitor, but this time he said, sorry boss, I bought in my hometown a bungalow, then I'm buying an apartment in your house, in your project. So that's one more reason, as Anuj referred earlier. And obviously the growth will come, the large growth will come only by the political and IT development or any kind of catchment or any kind of pull factor is there, then only the growth will come.
That's right.
Particular
the pull
city
factor has to be there. Mr. Kapoor, your closing remarks,
I think cities. Yeah, everyone has spoken out, and I think I'll just add to it, like reverse migrations, work from home has triggered the growth. And in fact, last 4 or 5 years, we have seen that the tier 2 cities' contribution to overall nation's primary sales has been increasing. So it used to be, we covered 60 cities. Top 8 cities used to contribute close to 80%. They have turned out to be around 70%, while the total overall pie also has increased. So that means the tier 2 cities has really grown over a period of time. And with the government focus, Gati Shakti program, infrastructure development, warehousing facilities, the new economic expansions is going to be a big enabler. But apart from that, I see the RERA is a very, very big enabler for credit expansions to the smaller cities. Very likely, we work closely with most of the lenders, and I'm seeing that they started reaching out to us to identify the developers to whom they can extend the credit and who are situated in tier 2, tier 3 cities. So the way that Irfan has said that, they have extended the support to 30 cities, and so as the many other lender has started looking forward for their own credit expansion, because the fixed geographies like 5-6 geography, which used to be a major geography, has really reached to a sense of highly competitive and saturated. So I'm saying that from all the directions, it's suggesting that the tier 2 cities will continue to be growing from here.
Okay, fantastic. So the data speaks for itself. Thanks, Piyush, for that entire summary of the discussion that you gave at the end. It encapsulates the entire discussion that we had. Thank you to all our speakers, Mr. Pankaj Kapoor, Mr. Arvind Jain, Mr. Anuj Dhodi, and Mr. Shailesh Puranikar and Irfan Kazi for being here, sharing your expert views with us, and Mr. Gupta for bringing out those views from our speakers. Thank you so much, everyone, for being here with us.
Thank you. Thanks for Thank you.
Thank you,
Sapna.
everyone.
Thank
you, everyone. Bye-bye.
That was one very interesting panel. We had a lot of positivity coming from our speakers on the growth, especially of the Pune city, and how it is, vibrant, how it is growing. Our next session is equally interesting. Let me tell you, everyone. Here we talk about building defining strategies, Pune's realty sales outlook. So how the sales are changing in the city of Pune. Let me welcome our moderator of the session, Mr. Praveen Apte, Managing Director, Pune Savills Property Services India Private Limited. A real estate professional